the heartbreak of Ukraine and all of that, is front and center, but it's really interest rates that are going to, drive this going forward. When companies have no profits, they need to discount their cash flows back to the present using an interest rate. And if that rate goes up, then those discounted cash flows are worth less. And that's why these growth stocks are getting punished. And they will continue to do so. And so the question is, what's the Fed going to do? They're well behind the curve. We've got negative interest rates here. And so now the outliers that this Ukraine thing has got some people thinking that they have to temper their activities. I mean, JP Morgan at one time thought they had to go 6 or 7 rate hikes. Now it's being dialed back to, 3 at best. And so it's that whole discussion. So it's going to be all about rates. It's going to be about Powell. But, at the end of the day, stocks are coming down but in fits and starts. You get these 15% blasts from the bottom every time it goes down. So this has not been an easy game to play. The volatility is picking up. We're probably likely to go into more consolidation. It's harder. I mean, I usually, buy these options, but the options now are too expensive for the risk. So your leverage is down and your risk is up. And the volatility is up, so it's a hard game to pay. Probably the best thing to do is sell calls, actually sell out of the money calls against out of the money puts, and count on some kind of extended trading range. But having said that, I always said just wait for a day to appear. Wait, so you could see that for the last couple of days, this is the IGV ETF. It's gone up, up, up. And we don't know where it's going to end. And I always say, let the market tell you where it's going to end. And then you can see that yesterday we started to get the first glimmer of where this thing may be ending. Now, again, when something goes straight up, it doesn't really usually go straight down. So I wouldn't, be surprised just to see another consolidation bar. But the more we get, the more it looks like that, the more you can start saying, okay, this is an area where I can understand risk-reward relationship where this is going to start to turn again. Maybe. So again, the more evidence we can compile in the next couple. So Bent, I don't know, somebody's drawing on my screen here. So this is the IGV. It's amazing how, look at that, just comes right back down to the resistance and stops. So we've been in this kind of downward channel in the IGV. I think we keep, trundling down. I think the patterns are extremely bearish, but you could go into a 3-month sideways kind of configuration. So, to me, that is the pattern. That is, once you kind of understand what is governing or guiding, a particular instrument, then, every time it kind of goes up, you start getting ready to see this thing going back down. So I don't know if it still needs to come back up here higher and do a little dance. That's the problem. And that's the problem with options. Time value starts eroding this. So the more this thing does nothing, the more options, start eroding. So it's, it's just funky in here. There's just, I just think that this looks like a bit of a trading range. But that being said, I'm always, on guard. This thing is going to come down long term. It's just a question of, what does long term mean? So, I saw that we went up a little bit higher on the Qs this morning, and we're already dropping. Yeah, it was up over 350.43, and now we're almost back to unchanged. So I do think these things are starting to. I think they found resistance, and I don't know that they roll over, but I think that we're going to go back down. See, 45, it's 1.3 million.
$1.3 million short.
So pop out a profit for 118,000 there.
gone
So
for
you
some
can see how
more.
this is going crazy now. You can see how the market's just going nuts.
I bet like $1.6 million on this position. I'm showing right now $23,000 gain.